Investing in the right assets in your 20s and 30s can have a huge impact on your financial future. With that in mind, it is important to identify the best assets to invest in during these key years. In this video, we will discuss the top 10 assets you should consider investing in during your 20s and 30s to ensure a bright financial future. 1. Savings account. A savings account is one of the most basic and accessible investment assets that you can make in your 20s and 30s. Savings accounts are FDIC insured, meaning that even if the bank goes under, your money is safe up to a certain amount. In addition, your earnings will grow over time as the interest rate compounds, allowing you to grow your savings in a very safe and secure manner. The downside to this option is that it usually offers a low rate of return compared to other assets. That being said, it's still an excellent place to start for those who are just getting started investing and building their nest egg. 2. 401k or 403b. If you're a full-time employee, you should definitely consider contributing to a 401k or 403b plan if your employer offers one. Not only do many employers match contributions up to a certain amount, but the tax advantages of these accounts are hard to beat. All money contributed is taken out of your paycheck pre-tax, and the money grows tax-free until withdrawal. Once you retire, the withdrawals can be made tax-free as well. Contribution limits are high, currently set at $19,500 for 401k and $26,000 for 403b per year. These accounts offer a wide variety of investments, including stocks, bonds, mutual funds, and ETFs. As with any investment account, diversification is key, so be sure to spread your contributions around among different asset classes and funds. 3. IRA. An IRA, or individual retirement account, is one of the best investments you can make in your 20s and 30s. It's an account set up for the sole purpose of saving for retirement and offers several tax benefits. With an IRA, you can invest in a wide range of stocks, bonds, mutual funds, and other investment vehicles that can grow your money over time. The money you contribute to your IRA is tax-deferred, meaning you don't have to pay taxes on it until you withdraw it in retirement. The earlier you start investing in IRA, the more time your money has to grow and the more likely you are to reach your retirement goals. Make sure to consult with a financial advisor before making any decisions about an IRA, as well as to ensure that you're taking full advantage of all of the benefits it offers. 4. Health savings account. A health savings account, HSA, is a great way to save money for medical expenses and reduce your taxes. An HSA is an account where you can save pre-tax dollars to cover qualifying medical expenses. It is available to individuals with qualifying high-deductible health plans and allows you to save money on taxes while preparing for potential medical expenses. For those looking to save money for medical expenses and reduce their taxes, an HSA is an excellent choice. While there are certainly other options available to save for medical expenses, HSAs offer a combination of flexibility and tax savings that cannot be matched. 5. 529 plan. A 529 plan is a type of tax-advantaged savings plan that encourages families to save for their children's future education expenses. The money you contribute to the 529 plan grows tax-free and can be withdrawn tax-free as long as it is used to cover qualifying education expenses. Withdrawals from a 529 plan can be used to pay for college tuition, fees, books, supplies, and other eligible expenses such as room and board. It is important to remember that the funds in a 529 plan must be used for educational expenses, or else you may be subject to taxes and penalties. It is also important to note that although 529 plans have the potential to provide significant tax savings, they may not be the best option for everyone, so it's important to understand the specifics of each plan before investing. 6. Stocks. Stocks are one of the most popular and potentially lucrative assets to invest in during the 20s and 30s. When you purchase stocks, you're essentially buying a share of ownership in a company and become a shareholder. With stocks, you have the potential to benefit from dividend payments as well as capital appreciation when the stock value rises. While stock investments can be risky and volatile, it also provides great opportunities for investors who have a long-term perspective. When investing in stocks, it is important to diversify your portfolio by investing in different industries and companies so that if one stock does poorly, other stocks may be performing better. Additionally, ensure that you are investing in stocks that are aligned with your risk tolerance and investment goals. Investing in stocks requires research and understanding of the market, therefore, consider seeking professional advice to maximize your potential gains. 7. Bonds. Bonds are an excellent asset to consider investing in if you're in your 20s and 30s. When you invest in bonds, you're essentially loaning money to a company or government. They will pay you interest in return for the loan, and at the end of the term, they will repay the principal. Bonds are considered to be a safer investment than stocks because the return of your principal is typically guaranteed. They also tend to provide a steady stream of income through regular coupon payments. Investing in bonds is fairly easy and requires minimal effort. You can buy them directly from the issuer or through a broker. Bonds come in various maturities, ranging from short-term ones that mature in 1 to 3 years to longer-term bonds with maturities of 10 to 30 years. Generally, the longer the maturity of a bond, the higher the interest rate you can expect. The great thing about bonds is that they can provide a stable income stream while preserving capital. So if you're looking for a relatively safe investment option with some potential for growth, bonds should definitely be on your radar. 8. Real estate. Real estate investing can be a great way to grow your wealth, especially in the 20s and 30s when you are just beginning to build your portfolio. It's important to keep in mind that real estate is not a liquid asset like stocks and bonds, but it does provide consistent cash flow and potential for long-term capital appreciation. There are a few different ways to invest in real estate, such as purchasing rental properties, flipping properties, or investing in REITs, real estate investment trusts. Investing in real estate can require more capital up front, but can also be more rewarding due to the potential of higher returns on investment. It's important to do your research, understand the local market, and be aware of the risks before jumping into this type of investment. Additionally, having a knowledgeable real estate agent or property manager is key to ensure you're getting the most out of your investment. 9. Precious metals. Precious metals can be a great investment for those in their 20s and 30s. Precious metals have been a time-tested store of value, so if you're looking for a long-term investment, this could be a good option for you. Investing in precious metals has several advantages, including the fact that it's a tangible asset that you can hold on to for years. Additionally, there is potential for capital appreciation. If prices of gold and silver increase, so does the value of your investment. Precious metals also don't produce any income, but they can still be a good option if you want to diversify your portfolio. It's also important to remember that precious metals are not without risk, so make sure you understand the potential downsides before investing. 10. Collectibles. Collectibles are items such as artwork, antiques, or other memorabilia that can have great value in certain markets. If you're a fan of a certain artist, sports team, or movie franchise, collecting related items can be an enjoyable hobby while potentially providing returns down the road. It's important to do your research on which collectibles are the most valuable and in demand before investing. You also need to keep track of the condition and provenance of the item in order to get the most out of your investment. Lastly, you should always take steps to protect the integrity of your collection to maintain its value. Collecting can be a fun and lucrative investment opportunity for those willing to learn the ins and outs of the market. As with any asset, there is risk involved, but if you educate yourself and manage it correctly, you can generate a significant return on investment over time. Investing in 20s and 30s is a great way to prepare for the future. You can build wealth through long-term investments in a variety of assets. By diversifying your investments across savings accounts, retirement accounts, stocks, bonds, real estate, and other vehicles, you can spread out your risk and create a stable portfolio. For those looking to invest more aggressively, precious metals, collectibles, and venture capital can be great ways to increase your potential return. Whatever route you choose, make sure you are well informed about each asset and the risks associated with it. With the right strategy, investing in 20s and 30s can set you up for a comfortable. Thanks for watching. Don't forget to like and subscribe to this channel for more updates.